Hey there, welcome back to Great Quarter, guys. This is episode 54, our first episode of the new year. Welcome to 2021. I'm glad to be here. I'm your host, Andrew Cox. I've got Seth home with me, my partner in crime, as always. Today we're going to talk about Amit Merotra's, who he is an analyst for Deutsche Bank. He's been covering the transportation space for nearly 20 years, and he says he wrote his 2021 outlook. It's his most bullish ever. So we're going to break that down, what his outlook entails, why he's so bullish, and give our opinions on his outlook as well. Before we do that, we're going to run through You Care or Nah. I guess we can do an official farewell to Dan Le Batard. He had his last day at ESPN yesterday, so I'll miss you. Whatever you do, I'll be following you. But before we do that, we can just talk that 2021 is off to a very wild start. We have President-elect Biden all but guaranteeing $2,000 checks last night to a group of Georgia voters should they flip the Senate today. We have one of the world's most famous and richest Chinese entrepreneurs, Jack Ma. He was presumed missing after 3 months of not coming out of hibernation. It turns out that he's laying low, whatever that means, in China. And then we also have the New York Stock Exchange said it would delist 3 Chinese telecom companies only to retract that 4 days later. So we got a lot going on in 2021. It's picking right up where 2020 left off. Seth, one question for you before we get into You Care or Not. I saw McDonald's is coming out with a new fried chicken sandwich. They're getting into the chicken sandwich wars with Popeyes and Chick-fil-A. Or would you try that, the chicken sandwich, or would you want the new Chipotle cauliflower rice? They're going for the keto-friendly version of rice.
That's a tough one. I really like Popeyes and Chick-fil-A chicken sandwiches, so I think I'm going to go with that one, but I'm also a big fan of Chipotle, as we were talking about, both as a company and the way it's run, and I like the food, actually.
Yeah, great food. Yeah, I love Chipotle. I'm really excited to try that cauliflower rice because I like cauliflower rice, but every time I make it, it's disgusting. So hopefully they make some better stuff than me. All right, so let's run through our own gauntlet of interest, You Care or Not. I'll give you a topic, an event, or an idea. You tell me you care or not and why. So the first one is about Norwegian electric car sales. So the sale of electric cars in Norway overtook those powered by petrol, diesel, or hybrid engines last year. EVs made up 54.3% of the new cars sold in Norway in 2020, up from 42% in 2019, and up from a mere 1% 10 years ago. Seth, you care or not?
I care, and I think I've told you before, my brother actually lives in Oslo, Norway.
I did not remember that. No.
And so I know a lot about this.
Does he have an electric car?
He has one of the Audi sport utility vehicle station wagon that I believe, it's either a hybrid or an EV, I'm not sure. But those are really popular over there, along with the Model 3s. The one that he has is almost like a Subaru Outback station wagon. And the reason why people like those is you can put the skis on top and do all that. But what I would say about Norway is just Norway's an extremely well-run country in general. They're very forward-looking. Now, a lot of that, I have these debates with my brother, is because they have 7 million people and they have trillions of dollars in sovereign wealth from these oil funds. But the way that they're moving forward in terms of diversifying both their economy, so they're taking all this oil money and they're not really hypocritical. They're investing all the cash flow from the legacy oil money into EVs. And when you go to Norway, you see Teslas everywhere. I mean, just absolutely everywhere. Everybody drives them. So I'm not surprised by this. 55% of the cars sold there, that's huge.
Impressive.
And they want to be completely carbon free by 2025. And I actually think, unlike a lot of these things that we see as far as like trucking and these goals that are thrown out there, that one actually seems like somewhat realistic because they ended the quarter with 67% of vehicles sold were EVs. So, and I just know, having seen them myself, they're wildly popular over there. So, yeah, I do care.
Yeah, I care about this one as well. I wanted to mention, it's probably that exact Audi model or a similar Audi model. I can't remember. That was the #1 selling car. It took over Model 3 this year. So the Model 3 was the second most sold car there in Norway. But yeah, like you said, they're projecting 65% of all new cars sold in Norway in 2021 to be battery electric vehicles.
Yeah, the only, if I were going to throw cold water on this story, the only thing I'd say is, I don't know if you looked at the annual sales of vehicles in Norway.
Yeah, it's like
150,000.
Yeah, not very many.
Just to put that in context, the U.S., the SAR is what seasonal annual adjusted rate. We sell like 17 million.
Yeah, each of the last 5 years.
And globally, it's like between 80 and 100 million, and China's like 20-something million. So it's a drop in the bucket.
It's a tiny market. But, you got to think, as you said, it's a forward-looking country. It's where we expect other countries to follow in line. It may take a couple decades, but we hope the U.S. will get there one day. We know it will get there. We know that the fossil fuels are a finite resource, and eventually we'll get to zero use of them, but it's going to be decades away. All right, but yeah, we both care about that one. Very interesting. The next one is also about EVs. So Foxconn is officially getting into the EV business. We discussed this a couple weeks ago when we talked about the Apple getting into cars. Foxconn is their main producer for the iPhone. They were expected and kind of rumored to be involved in the potential of a Apple car. But so Foxconn has inked a deal with another Chinese EV maker, Byton, to help produce its first vehicle. You care or not?
I do care just because, we talk about this topic every week, so I might as well stay on top of it. It raises a couple questions in my mind, though. Do you think, you seem to imply there, do you think this precludes them from working in Apple in any way in the future?
I don't. I don't. I mean, it's only a $200 million deal. This company hasn't produced any cars, so it's not like they're going to ramp up and start producing 500,000 of these Byton cars in the next year. They'll still have plenty of manufacturing space. They're a manufacturing powerhouse.
Yeah, and the other thing that when I read the article from the script, I was a little positively surprised. I actually liked that car, the SUV.
It was good looking.
It was a complete Tesla knockoff, but it was an attractive little car.
The Chinese are making really good looking cars. I mean, like everybody talks about Neo and Jiping and a couple of the others. I mean, they're good looking cars. And they're not that expensive either. I mean, the Neo's a little bit more expensive. It's actually in line with Tesla. They're starting at $40,000 or $50,000. By the way, have you seen Neo's battery pack replacement systems in China? Apparently, a third of their customers are buying Neos without the battery pack. So they strip out the ownership of the battery pack, and you pay a subscription every month, $150 a month, to get up to 6 battery pack replacements. And it's really quick, man. You just load into this thing, and in 4 minutes, you're in and out with a brand new battery pack.
Wow.
So rather than recharging, and apparently Tesla did think about this. They debuted this type of product in 2013, but kind of scratched it because they thought people wanted to own the batteries and they wanted to build out the supercharger network. They're thinking longer term, but the idea is not, it actually carries some weight.
And where do you switch out?
So they have these, they look like almost like a shipping container, and you just you back your car into it. They do all the work. They pull your car out for you, and then you're gone in 5 minutes.
Yeah.
It's pretty awesome.
I mean, in theory, it sounds great.
You need buy-in from a lot of different car makers, because right now there's like 160 of these stations spread out all over China for Neo. Tesla's got almost 3 times that in charging networks there. It's you have to have multiple companies that can use these to really make it worthwhile. Got to have some network effects.
Yeah, I mean, one thing that I would say as an American, that the Chinese seem like they're far ahead of us in EVs, even though Tesla has a $700 billion market cap. Like 1% to 2% of vehicle sales globally are EVs, but similar to the way that a lot of people in emerging markets in China and the BRICS, as they're called, they kind of skipped over the laptop or the desktop computer, and they just do everything on the mobile. When you don't have all these legacy car makers that have been around for 120 years,
right?
They're going straight to EVs, and they're heavily incentivizing them, and they have a lot of terrible pollution problems that kind of make that expedient, but they're actually doing a pretty good job of it, and that electric vehicle industry is on fire over in China.
Yeah, I mean, just the other day when the news kind of broke that Apple might be reigniting its car thing, Elon Musk's #1 response was, "We think our biggest competition will come from China." So that's why he thought it actually made sense for Apple to partner with manufacturing in China. I mean, just look at Neo. I mean, they make good cars. The stock, I don't even want to talk about the stocks. It's up 1,000% this year. But, right. I mean, they genuinely do make really good cars. They're having strong sales. They're not profitable yet, but I think they'll get there.
Yep.
All right. Back to it. Let's get back to You Care or Not. This one is on U.S. manufacturing. So U.S. factory activity accelerated to its highest level in 2.5 years in December. The Institute for Supply Chain Management, its index for activity bounced back to 60.7. That's the highest reading since October 28, and that's following a decline in November. Seth, you care or not about U.S. factory activity accelerating?
Definitely care, and I was reading the couple of page release from the ISM, the Institute for Supply Management. And, this is great for transportation, particularly Absolutely. LTL and rail and some of the more industrial exposed freight mix carriers. But, I mean, there's a lot of good stuff to take away from this report. 61, I think you talked about it. It finished the year on a high note. So it dropped down, the ISM dropped down to 40, I believe it was in April, where it bottomed. Mm-hmm. And it is now positive for 8 straight months. And it ended on a high note. And it's accelerating, and it crushed expectations. So, when you look at that, just for, I'm already bullish on the consumer. We're going to talk about this later. The consumer, and now with the industrial economy, it's only 12% of the economy. The consumer is way more important. It's 70%. But for transportation, it's a little bit more important than it is to the overall economy. So definitely care.
Yeah, we'll get into Moratra's feelings about manufacturing. He's definitely seeing that as a catalyst, especially in the first half of 2020. I agree as well. I definitely care about this one. And the one thing I wanted to note here is that it's a global rebound. You're getting very similar numbers out of China and out of all of Asia and out of Europe as well. IHS Markit came out with their advanced PMI for the Eurozone, and it was at its highest level in 2.5 or 3 years. So this seems to be a global rebound in manufacturing, which is great. It's amazing for trucking. We talk about how you and I think, are on the same page, expecting there to be a consumer drop, at least a good spending drop off at some point in 2020. At some point in 2021. I think that just when services are readily available to us, there's a lot.
You mean on the good side, right?
Yeah, on the good side
yeah,
of things.
Yeah.
The good side of consumer spending, I think we'll see a mix shift back to services.
Yeah, I expect overall consumer spending to be
continue
quite
to grow.
positive.
Yeah, I agree. I agree with that completely. But there has to be some mix shift back to services on the consumer side of things. So I think from a trucking perspective, this is going to act like a really great support in the back half of the year when that spending comes down.
Correct. Yeah, 100% agree.
Cool. All right, number 4 is we'll get a little stretch here to some streaming. This one's on Roku, one of our favorite companies. They are in advanced talks to purchase the library of content from short-lived and short video format provider Quibi. The terms of the deal are undisclosed currently. Seth, what do you think of this? You care or not about Roku buying the library from Quibi?
Well, Roku was my single largest personal account position. I actually trimmed it in half yesterday, which I'm upset because
up 5%
Wells
today.
Fargo put out like a $415 price target, and it's raging today. But so much has gone right for Roku over the last year. I mean, what's crazy is Roku I think it bottomed at around $60 or $70 back in March or April, and it's pushing $350 right now. So I felt a little bit greedy. I love the company, but it's like approaching $50 billion in market cap. We talked a little bit about this before we came on the show. I have a lot of thoughts about this. On the surface, I don't think it's a very big deal, right? Because Quibi, I don't know that much about it, but it's short form video. It's supposed to be 5-minute stuff. They've got some B-list actors where they seem to have a little bit of a backlog in terms of pre-recorded content. So in other words, I don't know that this is going to be a huge needle mover in the short to medium term for actual engagement and users on the Roku channel. But what I think is a bigger deal, which we can get into, is it kind of signals that, Roku was already in the content game, so they actually most people probably think they make all their money on hardware. That's not true at all. They make all their money on the software and the advertising and the subscription sharing revenue.
Right.
So anytime you subscribe to Netflix or HBO Max or whatever, they get an unspecified, most people think it's like a 15% cut. But what this announcement raises is it gets them more into the content game. And that means it gets you more. I think it's a risky, sort of delicate balancing act, because now you're getting into not only the traditional media's backyard, the AT&T now owns Time Warner, the Viacoms, the Discoveries, the you name it's of the world, the Turners. You are now getting into the same pool as Netflix and Amazon and Apple, and you're theoretically moving that goalpost more towards competing with your customers. So you have to be careful here. And given the fact that they've already had some sort of contentious negotiations that took months to play out, and there was a lot of sort of, stuff released to the press about how tight of a battle it was on particularly HBO Max and Peacock, I think it was.
Yes.
And so Roku has shown they're not afraid to go toe-to-toe with the big dogs, but I think here they just need to be careful that they don't sort of bite the hand that feeds them and anger their suppliers.
Yes, that's we've long loved Roku because it is to Switzerland. It is the neutral platform. They don't encroach on anybody's field, but here they are doing so, and that's my only worry. It's an expensive table to sit at. I mean, if you want to sit really to make content that can compete with Amazon, that compete with Netflix and HBO, you got to spend billions every year. Netflix is spending $3 billion per quarter on content.
It's actually more than that. The Wall Street Journal said that. I think Netflix is spending at least $15 billion this year.
So,
and by the way, that's growing 50 or 100% every year.
Exactly.
So, and just to put that in context, Roku's quarterly revenue, even though the company as the stock is way up, they only have $3 billion in quarterly revenue. So even if they didn't run their business and spent 100% of revenue on content, that's what it would take to keep up with and then some, to keep up with the Netflixes of the world.
So what do you think? How do you think Netflix, Amazon, Hulu, how do you think they take this news? Do you think they see it as any type of threat, or is it just...
Hard to say, but have you ever watched interviews with Roku's CEO, Anthony Wood?
No.
I would suggest go look him up on YouTube. Do you know what Roku stands for?
I don't, actually.
It's Japanese for six, I believe, and it's the sixth company that Anthony Wood has founded.
Oh, so serial guy.
And if you go watch him and you listen to the earnings calls, and there's some good presentations on YouTube, he's kind of an aggressive guy, and he's forward-looking, and he's seen a couple of markets. So he's not that different from Reed Hastings in terms of personality. If you know Reed, Reed is very, I love Reed Hastings. He's aggressive, and he's not afraid to build his company and take big risk and do all it's the same sort of guy. So it's very strong personalities, in other words, going up against each other. So I have no idea. I think a lot of these, particularly the Apples of the world and the Amazons, play their cards extremely close to the vest. We've talked about that with the car announcement.
Yep.
I mean, Apple won't even come out and say anything about whether or not they're involved.
I really did think we would hear of something else. In the past, 2 weeks or 3 weeks since that news came out about Apple, I thought we would hear something from them, or at least a leak, from something inside.
Is no statement a statement?
Yeah, right. How much do you read into them not making any statement?
I don't know. I wish I knew.
Tight-lipped. The last thing we're going to mention on Roku, I don't think we mentioned it. This deal is really low risk from a cost standpoint. They're probably going to pay pennies on the dollar from what it costs to produce this content. So they could get. But I also was wondering, let's say they had 40 shows, whereas Netflix might have 40 shows, and that's 4,000 hours of content. Like they might get 40 shows and get 400 minutes of content. And I wonder how the actual hour to time breaks down of what they're buying. If they're buying this big catalog from Quibi, but I wonder how much actually minutes or hours of content, since it's so short form.
Yeah, I don't know the answer to that, but obviously the strategic, I don't know if I said it well, but the strategic importance of this is probably more than the actual importance. And, they're just trying to increase that flywheel where, the margins on the advertising and they're a lot better than selling hardware, which is a razor blade model. And so they're always trying to push the business to more users, more engagement, to promote the flywheel and drive the margins. So I think that's what they're doing here. But I don't know. It will be interesting to watch. They may end up getting in a spat with one of their big customers here.
All right. Let's get into our main conversation. So we're going to talk about Amit Moratra, who is the Managing Director and Head of Transportation and Shipping Research at Deutsche Bank. We're going to talk about his 2021 outlook. He said in almost his 20 years of analyzing companies and industry, his outlook report for 2021 is the most bullish he's ever written. He says we have high confidence that the demand trends will surprise materially to the upside. Seth, you want to go through a couple of those demand trends, and then we'll kind of discuss after you name them?
Sure. First of all, are you as bullish as he is?
I'm not as bullish as he is. I'm not.
Either.
Maybe in the first couple quarters, I think we have some lingering effects where consumer demand is still, relatively strong from a historical standpoint. Usually Q1 is pretty weak for consumer demand. But I think just given the fact that we still can't go to the movies, we still can't go to concerts, or still all of these services that we typically spend our money on are not available to us. I still think people with the additional stimulus check, the possibility of a third stimulus check, I think there's enough momentum there to keep consumer spending high. But I'm not as bullish as he is.
Yeah, I'm not either, but let's get into sort of the elevator pitch for why he's so bullish. Basically, it's a lot of the usual stuff, really tight capacity, right? And by the way, he's bullish on truckload, LTL, parcel, and rail.
Pretty much every sector.
Basically everything in transportation. So, but within truckload, I think that his bullet points here, and I'm looking on our script here, so you said demand will surprise materially to the upside. And why does he think that? Well, in short, he thinks that both the consumer economy and the industrial economy are going to be on fire next year.
Correct.
And I think we're already starting, we've already seen that, well, consumer was starting to wane, but we've got that next round of stimulus that went out, the $600 checks and the extra $300. So I think that's I expect to see acceleration and really good results out of most retailers coming up, at least until the vaccine. But then the other thing that he's looking at is, within industrial, right, he's predicting really rapid demand growth for refined oil products. Now, a lot of that's going to depend on people going back to work and vaccines, because a lot of that oil is used not only in 18-wheelers, but airplanes and automobiles. So that is one of his things. The other thing is, I'm also bullish on this. Even the traditional automakers, I'm bullish on. Auto production is supposed to be up over 20% year on year. So that's good news for all, and a lot of that gets transported on the rails as well.
Yeah, the only thing I was going to mention there before you keep going is that if you look at inventory levels for vehicles, they're at its lowest point in a bunch of years. I mean, they got dwindled down because factories were shut down pretty much all of March, April, and May. So, and then the rebound, and demand kind of just dwindled inventories down at the dealerships and everything else. So, yeah,
right. So you get that double bang for your buck. You've seen the same thing with steel inventories. Like those got really washed out. And so when you come out of a recession and inventories are low and demand returns, you sort of get that double bang for your buck on revenue and earnings. But moving into his last bullet point here on the industrial side is Boeing. So I don't think a lot of American consumers and the general public knows just how gigantic Boeing is. Jim Cramer was talking about it yesterday. If you heard him, they employ 2 million people.
It's remarkable, dude. Yeah, and in his article, he talked about how most of the 737s are produced in Kansas and then are taken by rail to be final finishing in Seattle or in Washington. So I mean, just that project alone, that rail line, the amount of money and the amount of just billions of dollars that flow through that line it's unconceivable if you don't know about the company and the size.
Let's put that in context. So I think there's 2 million truck drivers in the U.S., and I think that's more than Amazon has in terms of employees.
They're encroaching.
I think Amazon's close,
quickly.
but maybe 1.5 million or something. So anyways, he likes Boeing, and Boeing, obviously, the 737 MAX, I don't know if they're dropping the MAX or not, but it's back in commercial flight, and the order book is building back up again.
Quickly.
Boeing's repairing their balance sheet, and especially with Biden coming in the White House, a lot of people think that, the Chinese have a lot of growth and secular growth for air travel. And so a lot of people think that the Chinese will start ordering planes from Boeing again and Airbus, but once this is all going. So that's all good. Wrapping it up here, though, he also likes, on the consumer front, he says, a surge in consumer activity from a release in pent-up demand.
That's my only point. That's my only place where I'd push against him here, is that we've seen that release of pent-up demand. We saw that throughout the entire back half of the year with e-commerce and with consumer spending.
Yeah.
I don't know how much more pent-up demand there can possibly be.
I think there's tremendous services pent-up demand. Like, I'm dying to go on a vacation and go on a flight and spend money at hotels and restaurants and all that. But like, how many more goods do you really need? You've probably stocked up on most everything. So I have a little bit of a disagreement with there. Now he might be thinking something else. I'm not sure. But anyways, the last thing is the inventory restocking. He points that out. That's still got legs.
Definitely.
A lot of people think that, how does that have a full year of legs, or is it more of a first half 2021 story?
Yeah, I think he said
I think is debatable.
I think he said first 2 quarters he sees strong inventory restocking. That's going to keep carrying us. I mean, I wrote about this. I think there's going to be a major inventory correction in the first half of the year, maybe throughout 2021. Retailers are dwindled their inventories down to far below pre-COVID levels, and then you have all of these catalysts that are forcing retailers to hold more inventory, and one of them, e-commerce, is the same thing that dwindled inventories in 2020. Now that people like Target and Walmart and all these other companies are retooling and pivoting their back rooms to fulfill online orders, they're having to hold more inventory at stores. All of this travels downstream, and I do think there's going to be a correction in inventory, which will help trucking and keep the party going.
By the way, and a lot of this, all this stuff that we're talking about, and I've listened to a lot of conference calls. I was listening to like 20 transportation conference calls. I'm going to give a shout out to the Borsa earnings app. Have you ever used that?
No, I haven't.
It's excellent, and you can listen to all these conference calls. But one thing all the transportation executives pointed out, and it is riveting to me. I actually really enjoy it.
I know you
which
do.
is funny.
Nerd.
So. A lot of we're talking about the V-shaped rebound in inventory, and so it was just so fast that you had to really batten down the hatches and preserve liquidity and take in your working capital, because the world was absolutely shutting down.
Yeah.
GDP was going down by 35%. People were getting laid off everywhere. Like, it literally looked like the world was going to end. And so everybody drew in that inventory. And then all of a sudden we got a snapback in consumer spending driven by stimulus. So you had the net effect of all of this is that you had, like the shortest, deepest stock market correction in history, not the deepest, but the shortest and the deepest at the same time, got killed, down by 35 or 40%, and then came right back. And then you're seeing the same thing at a little bit of a lag in the real economy. And so now 2021 sets up pretty good because, as we talked about, you're rebuilding all those inventories, but it got supply chains way out of whack. It got inventories way out of whack. It got warehousing. The way goods flow through the global real economy, that's why you had all this tight capacity in 2021. So we're still dealing with all the after effects of all that.
Definitely. One thing here to note on the restocking thesis. So he uses Target as an example. He does inventory to store. Inventory at each store is up 9.5% year over year, but the same store sales is up 20% year over year. So that gives you an implied sales to inventory spread of 1,100 basis points. He says there's similar numbers at Walmart, Dollar General, and Tractor Supply. So that's kind of his data there, saying that most of these companies are growing same store sales much faster than they're growing inventory per store. So that's kind of where he sees a lot of the restocking to come from in the first half of the year.
Yeah, and any good retail analyst will tell you that type of spread is really healthy for gross margins, which drives earnings power at
right,
retail.
So is that just so that they don't have to discount
They can
as much?
do full price selling because there's more demand for those goods. And if you have too much inventory, you got to fire sale it at the end of the quarter, at the end of the year.
Right.
So that's all good. The last thing he said, and this is I actually had two disagreements with him. He's pointing to this as bullish, and I guess I can't argue that it's bullish, but he's saying that basically because housing prices are rising so fast, that all these people are taking out home equity loans. And as someone who started their career in 2007 and 2008, there's nothing that scares me more than people being greedy and cashing out and levering up and taking their equity out of their home to go out and buy stuff. But I guess that in the short
Doesn't
term,
get much more
in the
American.
short term, I guess that's bullish for transportation. But in the long term, that can be worrisome.
Dangerous game.
Yeah.
Dangerous game. So let's talk about capacity for a moment. He thinks the headwinds are here to stay. So he mentioned that in every market there's always barriers to entry, and the barriers to entry this year have risen. They've gotten more difficult to climb over. That includes the Drug and Alcohol Clearinghouse, the decline in CDL issuances, the driver training school constraints, as well as rising insurance payments and rising driver wages. He says there's always a clearing price to bring more capacity in. This year, it's just higher.
Agreed, and we've talked a lot about this. I don't think there's, the new truck orders are exploding, but they're having trouble seating those. I don't think you can really argue with that, but at the end of the day, there's two things that are going to be likely here, which is there's almost certainly going to be a mix shift back to services spending from goods, right? And there's almost certainly going to be rising driver capacity. Yes. It's just a question of how much time that takes. And then when you lump in the fact that he's the most bullish he is in 20 years, but then he's projecting earnings in 2022 to be down 20%, and he's way below consensus. So to me, some of that sort of feels like threading the needle a little bit and playing a game of chicken in terms of, yes, it's extremely bullish, but how long can it last?
Yeah, I loved his statement here. He was like, given the characteristics of trucking, the fact that it's highly fragmented and the fact that there's, albeit rising, but very low barriers to entry, he says it's never different this time. It's always the same. And that's, we talked about this back when we first started seeing those new truck orders in October and November. We're like, is this time different? Are carriers going to learn? Are they not going to overbuy? And he's saying no, but it's the fact that the high, the earnings cycle can go higher over time, but the low comes worse as well.
Right, and I think what he's saying there is if you evaluate these public companies on normalized earnings, which is across a full cycle, then theoretically the stock should gain and the company should gain value because its earnings power each cycle is growing, and I get that. So anyways, what else do you want to talk about? We got about 1 minute before we...
I got a question for you. So if this is my point of sale on Monday, I wrote about retailers doubling down on brick and mortar. If you were Dollar General or if you were At Home or Home Depot, any of these companies that thrived in 2020, would you be expanding brick and mortar locations in 2021?
Dollar General, 100%, because I know it, and they have 25,000 stores, and they put up thousands every year, and they have the best payback. It costs a couple $100,000 to put them up, and they do like $1 million a year in revenue.
All right, well, that is all the time we got today. We'll come back to that conversation soon, but I want to thank everybody for tuning in. Go to FreightWaves. Go to Freightcast on Spotify or Apple Podcasts to subscribe to everything we got. We'll be back next Tuesday at 3 o'clock. See you then.